For more on this, let's speak to Jameel Ahmad, who's Chief Analyst at Forex broker GTC. Welcome back to the programme, Jameel. Now, with the US Treasury's plans to double its debt repurchases, what does this essentially mean for borrowing costs, and how much can the move actually ease pressure on the bond market?
I think you have to consider here what is creating volatility in bond markets, and not just in bond markets, it's global markets overall. And the name of the game here is uncertainty. So the question to ask is whether the ongoing uncertainty that's happening across the world and of course impacting global markets and the global economy, is that going to come to an end? And the probability is no, because of what's happening geopolitically and because this constant plot twist of changing how things might be, and that uncertainty is continuing to fuel volatility, not just in bond markets, in global markets, oil, the US dollar, gold, as you've mentioned just a few minutes ago. And because of that uncertainty, it's unlikely that this is going to change anything, apart from alert investors that the US Treasury Department are actually aware of the issue.
Right, and that uncertainty continues to rattle energy markets. And now with the US announcing new economic sanctions against Iran, could this turn what's already an oil price shock into a broader inflation problem for the global economy?
Again, because of the ongoing uncertainty, and that's set to continue as far as we see it, then the inflation uncertainty when it comes to expectations is also going to continue. So what do we see up until the end of 2026 at least? Elevated inflation pressures. And that's unlikely to ease unless we have a resolution to this ongoing geopolitical issue in the Middle East. But again, we've been here now for the past 6 months. We've had a lot of hopes that matters are going to be, solved, and that hasn't been the case. Maybe one bright spark we might take from this overnight news is that it appears that the United States administration are now looking at economic pressure and diplomatic pressure rather than what has been geopolitical and military pressure in terms of what's creating the volatility over the past 6 months or so. So maybe that will ease some of the volatility, but at the same time, we still have very volatile, elevated global markets, and the inflation expectations remain very much subdued in terms of it's subject to change. And that's not only what the narrative is coming out of analysts and economists. It's also from institutions, the FOMC, the Federal Reserve, the US Central Bank. I think globally, worldwide, all institutions are seeing uncertainty continuing.
Right, and Fed minutes released recently shows several officials actually backed a July rate hike over inflation concerns. Does that suggest that markets may be underestimating the risk of rates staying higher for longer?
It depends on what particular asset class we're watching at this point, because if you're talking about global markets, then yes, we are underpricing these risks on Wall Street and so forth. But that's because Wall Street's also been very much helped by corporate earnings, by AI boom, and that seems set to continue. So you have a bit of a disconnect here between what's happening in Wall Street and what's happening in the world economy. But if you're looking at other asset classes, what's happening with the US dollar suddenly fall into a 3-month low. You've already mentioned that we had the biggest gold move higher in around 6 months overnight, and we have oil prices that remain volatile. So certain asset classes are not underpricing the volatility, but it seems that Wall Street and global markets are just moving to the beat of a different drum. But of course, geopolitics continues to dictate sentiment. We still are experiencing a very sentimental-driven financial market. We're looking at headlines. Headlines are creating volatility. We're not really watching economic data. Price action in terms of technical analysis is also playing in the background. But this remains very much headline-driven. So depending on where the headlines move next, that's what's going to be driving the volatility.
Jameel Ahmad, great to have your analysis. Thank you.